Good morning, everyone, and welcome to Morning Market Movers. It is Thursday, January 20th. Can't believe we're working our way through January. And on the show, we do live analysis for day trading. We take a look at hotspots in the markets. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. A few top line things that we're going to be talking about today. We did have the Philly Fed Manufacturing Index number come out. Was not as bad as what we saw coming out of New York. Jobless claims for the week just came in. Initial jobless claims punching higher back to levels we saw, I think, in October. So interesting to see that. But we'll talk about those numbers a little bit, how the markets are reacting to them. We are seeing gold and silver moving higher, which is interesting. We are going to look at some setups for nat gas and oil because we do have both of those inventory reports today. We've got natural gas at 10:30 a.m. and oil at 11 a.m., both on the same day because of the holiday on Monday. And then we certainly have to talk about equities. We're going to talk about equities because NASDAQ did close down 10% from its highs yesterday, officially putting the NASDAQ in correction territory. And we're trying to open in the green this morning. Maybe we'll see some stabilization. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Before I flip it over to Brian, I do want to point out, if you haven't registered yet, we are doing another boot camp on Tuesday. It's going to be a boot camp on trading the stock market. So it's going to be all about equity indices. We're going to have Brian on there. I'm going to be speaking. We've got a couple of other speakers, one from Tasty Trade, Jamal Chandler. I'm looking forward to having Jamal join the show. And I think he's actually going to be kicking us off. He's our leadoff hitter on Tuesday. So if you haven't registered, please register and please share it with your friends. Everyone is welcome. We do record those, so if you can't join for the entire day, you can access the recordings later. But registering allows you access to those recordings. Please join us Tuesday. It's our next boot camp. All right, Brian, I'm going to flip it over to you, and let's take a look. Some of these numbers that came out this morning, and then let's jump into the markets and take a look at the charts.
Sure. Yeah, I mean, thus far we knew we were going to have again another day of the International Economic Forum. No major headlines necessarily out of that one we have to watch out for yet. Yellen is doing her speech at it tomorrow. We'll see if anything comes out of it. Philly Fed Manufacturing, obviously based off the number this week, the manufacturing condition, the economic conditions in Pennsylvania are better than they are in New York, because remember that number in New York was a negative number. Well, the Phillies version, the Philadelphia version of it actually came in above expectation and actually increasing, where the New York was expected to be lower. This was actually expected to be higher than it was previously, but it came in at a substantial, been a bit above, the 23.2 versus the 18.9. So that's positive. Again, that's some good news for the overall indices. Unemployment claims, they were on the other side. There was a little bit of a revision before, and again, they're starting to creep back up again. Can be a lot of different reasons for that. Again, some of that is seasonal. You tend to see it a little bit more in January anyway. Question is, which one of those two, they're both considered medium releases, is really going to steal the headline today? After what we saw yesterday, we were talking about, yesterday, all reversal. We kind of got that. The only news that really, besides crude oil today, the only other news out there are going to be more or less news headlines. And there's a couple of them that we kind of got to talk about and kind of mention because it talks about what, we're mentioning. One of them is China. So China eased its rates a little bit. They actually cut the rates by, 10 basis points. U.S. bonds reacted to it. And interestingly enough, now, and again, we've been saying this, but now it is in print. There was someone saying that, the U.S. bond yields rise higher again on expectations. Again, listen to this. Expectations that the Fed may need to hike by as much as 50 basis points at March's meeting. Something we've been saying for 2 months now, 3 months, that don't be surprised if there's a double on that first one. Now people are starting to say that the Fed may need to do a double. So interesting that is rolling out there.
Just to put things in perspective, we see China lowering their rates, but they're lowering their rates from 4.65% down to 4.6%. Their 1-year rates, they lowered them a little bit more dramatically, but they're still up at 3.6, 3.7%, something like that. and you have to realize the U.S. we're at 0.25. I mean,
Yeah,
we're
point
at
two five.
zero. So
Yeah.
for us to go, go up 50 basis points, yeah, it sounds like a big number, but it's coming off
Well,
of
yeah,
zero.
I mean, it technically is. I mean, got to realize 50. It is kind of a big number. If you look percentage wise, what the gain is, a point 0.10 is not really. I mean, it's worthy of a headline, but it's not in reality that much of a cut. It's just the fact that it is a cut and not an addition at this stage right now also kind of shows you what's going on with the Chinese economy right now. Because
And all that.
again,
They got troubles. Yeah, and
I mean,
they're
New
having to
Zealand
fix them.
raised. Yeah, I mean, New
Yeah.
Zealand raised. The UK raised. China's or not China. The US. It's how much are we raising in March? Canada's right there. Everybody else in the world right now in that recovery phase is at the okay time to raise. We got to crush inflation, and they're still cutting it back slightly. They don't want to go too much, right? So
Right.
they're starting to cut it back. Again, kind of stage two of that. It says amid inflation fears and the decline in crypto prices, gold has now resurrected, rallying the most in 3 months yesterday on its best level since November. So it's interesting, and they're talking about that, how Hong Kong is rallying. So, again, this is something that we have seen, and we've talked about it before. We mentioned gold should be much, much higher than it actually was. And we saw cryptos go, again, all the crypto experts out there like, oh, it's up to 68. It's going to be at 100 by the end of the year. And none of
Right.
those things happened. And in fact, we'd gone down and actually broken below 40, and we were kind of fluctuating back and forth again. But the one thing that we are seeing now is gold. I mean, straddling this, this 1840 level, looking at gold, they say, what the heck is going on here? And at the same time, you look down, and you can see the Bitcoin, it's at 42,000, right? Remember, it was at 68, just a few
Right.
months ago. It's up today, but then again, look at gold is just continuing to grind higher as these assets. And again, remember, cryptos, yeah, it makes sense because they've been beat up lately, and they're also following the equities. Equities is kind of risk on, bonds and gold and things like that are risk off. And again, you're seeing the appropriate reaction to it. But I think gold is important to bring up. We talk about bad is good. This is one of those scenarios again where the inflation wasn't as high, and it's like, wait a second, maybe we don't need to crush inflation down. But then you look at this over here, and you're like, well, I don't know, maybe people aren't working. Maybe we don't need to be super strong and it'll work its way out, right? And then Philly Fed comes in with a big number saying, yeah, no, it's still positive. The economy is looking good. And again, most of the earnings, minus the banks, and again, the banks are always kind of their profits were low just because the markets were not as volatile as they could have been.
Yeah, it was all on
That
trading revenue.
happens.
Right.
Yeah, I mean, poor banks, they only made $4 billion. So there's a lot of factors going on, but it is very, very interesting. So I would say so far everything is more or less positive. Again, seeing a negative number here is good for the indices. We saw the indices yesterday. We talked about a 1030 reversal. It actually went a little bit sooner and dropped. Today's kind of the exact opposite. Things are looking good. I would say the one big headline that we do need to watch out for, and it's been here a few different times, is Russia. Basically, the Russian activities in the Ukraine.
Yeah, we're talking about
Here,
oil. Yeah.
Yeah, well, oil,
And the
natural gas
equities.
are going to be involved with it, as well
Yep.
as anytime there's war, it is obviously going to be a big deal. Now Germany is saying that, hey, Germany is now worried about Russian activities. They believe that we should try to, we gotta keep the dialogue going, and they're urgently calling Russia to take steps to de-escalate. Last night, we saw this where President Biden says that, it looks like he thinks that he's going to move in, right? Like, if you listen to him, this confidence level is, he's probably going to do it. He can. They're set to go. Like, our talks have not stopped it, and we don't believe that they're going to. Is kind of where we're at right now. And the question is, have we taken a hard enough stance on it? Invading other countries is definitely going to throw some disruption in there. It's going to mess with oil. Again, not that the world is being funded by Russian oil, but they are a member of OPEC Plus, and they do have allies and things like that. And as soon as you start throwing sanctions on them, then it
Sanctions will
also
get
blocks them.
involved. It'll mess with
Yeah.
supply, everything. Yeah, it does throw
Yeah.
a wrench into the system.
Yeah.
So, and we do have those inventory reports. So, I do want to go over those charts.
And then rolling into that today. I mean, here's the crude oil inventory report we got from last night. There was actually a build in supply. And again, oil is pretty high right now, right? I'll look at the oil chart in a second, but again, remember, this is the industry forecast, or this is the industry-based report. The forecast was there was going to be a slight down draw of minus 1.6. It actually came in a little bit higher. And in all reality, this doesn't surprise me what's at all. And the reason being is, if you think about what's happened in the last week, 2 weeks, East Coast had a lot of snow. right? When people are snowed in, they're not using as much gas and oil. That will obviously show in the data. Yes, it is a little bit delayed, but it is definitely something. When you have snow and ice and things like that, there are less people on the roads. And it's one of those kind of Mother Nature factors that you got to kind of work in. So, not really surprised we had more of a supply this week. But because of it, you can see we actually had a gap in oil yesterday. It actually kicked in, 4 o'clock yesterday, really right when this API report came out. It's like, wait a second, what? And it bounced off an old level where buyers came in. So now we're kind of consolidating in, getting ready for kind of where news is. So I would say right now, oil today, this is a very, very small kind of range inside the European session. And it literally all it did was it went up and came right back down again. It closed exactly where it opened.
Yep.
A lot of times for oil inventory reports, we see a lot of the pre-movement happen in the European session as they kind of prepare. Today, not so much, because again, if there's a supply, that should absolutely be a red number. And again, it's red right now from where it closed yesterday. It should be. If we have way too much supply, price needs to come down. But Russia crosses that border. Again, it's a supply disruption that sends it higher. So oil right now is getting like a coiled spring. I would expect that we kind of bought one way or the other today. Could be oil inventory, or it could be the kind of assumption that, like I said, there wasn't a whole lot of confidence in Biden's speech about Russia not crossing. And what we're really going to do about it. And the question is, it's like, we're going to be hard on you, but what does that mean? And do they feel that the response is going to be hard? I don't know. Seems like the overall question is, right now, who knows?
Anticipate that there's differing pressures on the price of oil. The supply, if we've got supply, if we're not depleting as quickly as we anticipated, you'll see the price come down. You see something happen over in the Ukraine or even in the Middle East, you can end up seeing
we have
oil
rocket
go higher.
attacks there as well. Yeah. So,
right.
and again, one of the things that you got to realize, guys, too, is this may not be something we can necessarily trade today, but it's something you need to watch out for. Understand with oil and gas prices, being up here in this 87 range, we haven't seen the reaction in the prices of goods and services we're paying. When we're paying, got to realize transportation costs go up and they get passed down. They haven't come across yet. So what they were saying, there was an article I read last night, talked about we haven't seen the increase in food and vegetable costs yet. As we start to come online with that, if prices remain this high, we're going to start seeing massive amounts of food inflation once the spring starts coming. We have to start shipping food and vegetables back and forth again. Have not seen it yet. So we know how high inflation is now at 40-year highs. We haven't even come into the major inflationary season yet, which we're about to step into. So again, a lot of headlines, a lot of moving pieces out there. I would say kind of watch oil today. I do think where it is right now, oil is probably set more for a little bit of a bounce. And again, seeing that the industry specific number, again, it did take a big draw, and you don't really see, gaps all the time. Do the standard, the standard strategies that we talk about, 35-1. Get in there at 10 o'clock, see where we go. Because again, the overall retail trader hasn't kind of experienced it. A lot of people will be long right now trying to play this fill the gap. And again, remember, typically the U.S. session is a little bit more biased, in the upward direction. Do we break 88 today? Probably not. I think we probably come back somewhere in the 87 range. As I said, the Russia scenario is kind of a problem. Natural gas is actually down big right now. Natural gas is down 2.93%. Remember, it is Thursday. They do have their natural gas inventories. Where price is right now, and we're kind of basing on it, was that target of $3.93 that we were talking about. If we can maintain and stabilize down here, this could also be an opportunity to go long. I know we're on another snow day. It's doing nothing but raining, but if you look at the radar, I think in like an hour, it's supposed to completely turn to snow.
In Chicago, we're in single digits. And
we don't have that
wind chill, we're below 0.
41. Yeah, it's 41 here. It's a balmy day,
Yeah, it's going to be 41 here too. Negative 41.
Negative 41. So, and that's the thing. This is now us. This is our third snowstorm already in 2022. So I don't know. I guess, it's climate change now, because now it's, I guess, worse in both directions. But our kids just got in, because we're off today, they just added another snow day. So at the end of the year. So I think we're going to like June 24th now. I think I think that what they're trying to do is break kids in with year-round schooling. Because like at this point we have no June. We don't get off school until July 4th
with all the breaks.
So yeah. So again, remember, natural gas comes in first today. Watch those two. Again, just looking at the dollar real quick, because again, the price of the dollar does factor into those. The dollar did take a little bit of a bounce. There's an area of sellers that we kind of bounced off of. A lot of these buyers in here, again, I'll draw a line on it real quick. I'll just do a horizontal line. You can see that buyers have stepped in here around this 95.43. If it breaks through that, which again, it looks like it's trying to punch through, we got a bit of room to run to the downside. So this should not be inhibiting oil whatsoever today. And again, like I said, with China and Russia, I think right now are going to be the two big hotspots. look for the market to, kind of act appropriately. We said we finished on indices. VIX is
Yeah.
down 3.69%. It's not as high as where we closed, and it's chiming back again. I would say again, Russia is the big kind of linchpin in this right now. After yesterday's kind of volatile time back and forth, I would say that again, we're probably more due to being in the green today across the board. Yesterday we talked about reversals. The reversal came in at 10 o'clock. I missed it by 30 minutes, which again, 10 to 10:30, we talked about that. It ended up not coming up to our level. It ended up using the psychological level of 4,600. And again, this is why we have these marked. Look at how it bounced off 4,600 at 10 o'clock. We were looking for the reversal, just missed it by a little bit, right? And it happens. Punched all the way down. And look at this. It bounced off of 44 or 45.50.
It paused.
Down, pulled back up again, 45.50, and bounced it. And again, these are the same lines. I haven't moved these lines at all, guys.
Those are the doubles. Yeah, those are the double zeros.
Double zeros are the 50s because it's a smaller one. So I would say right now where ESA is, again, we have some buyers coming in just a little bit lower. And again, this one we can probably just take this off to keep it. I guess I can bring it down. And it kind of helps us a little bit with that level right there. There's a level potentially at 23.6 over here at 45.66 for a reversal this morning. That would be now the 23.6 level off of that. Let's see, NQ wise.
NQ is the one that's leading us up. I mean, it's the one that's gotten beat up the most.
Yeah, and look at that. It just happened to go off, 15,000. We talked about 15,000 yesterday being a big psychological number, and it hit it last night at 6:30 at night, and then we based off of 15,100, and now we're sitting at 15,200. So I would say, if it maintains its strength this morning, it looks like we don't really have any major levels. The 50% is all the way up here at 15,500. So we got plenty of room to run to the upside. A little bit of sellers, although I'm not really concerned about that. I'm really probably not concerned until 15,300 and 15,400 as being areas where I look for sellers. So it's the strongest right now. If we maintain that positivity, it looks like NQ is going to be the way to go. YM a little bit choppier. And again, you had manufacturing numbers today, so it kind of makes sense in that. If we continue to bring this down, you can see the same level it bounced off of was that 23.6 level. I would say, right now, YM is the weakest right now. I would say if we do take a turn and people are looking at the unemployment number, I would say that YM would be the one we'd want to get short. And, overall targets to the downside, I mean, we're at 35,000 right now. We talked about how important that 35,000 number is. If it does start creeping down and the media takes off and says, wow, we're back under 35,000 again, and people are like, oh man, unemployment rate is going higher again, that could lead to negativity. So again, any basing around this 35,000 could lead us for potential shorts. And normally the Russell is what leads, even though now it's NQ. Russell completely flat, not giving us a whole lot in there. And again, we had that one kind of pull up. We talked about a 10:30 reversal. It came in at 10 o'clock yesterday. So it was there, but I missed it by 30 minutes. But today I would say I feel a little bit better about it as long as, we don't have Russia crossing. If we see no other major headlines, as I said, the stabilization has been good. Hong Kong markets are up. Gold prices are going higher, particularly if oil comes in. I think oil could definitely be something that helps us out. And remember, it's not at its normal time. It's not at 10:30. It's at 11 o'clock today. So you need to make
gas
sure you
is 10:30.
Natural gas at 10:30. Yep.
Oil
look at 10:30 is when you start looking at crude oil.
Yep. Perfect. All right. With that, any questions for Nadex, please email us customerservice@nadex.com. Brian's and my emails that are there at the bottom. I want to remind everyone, again, if you missed it, if you haven't registered for the boot camp, we have this boot camp on Tuesday. It's all going to be about trading the stock market, equity indices, and how to access price action in the markets with equity indices. Please feel free to share it with your friends. I know, and we do have a pretty decent lineup. So hopefully you can register. If you register, it does give you access to the recordings. I just wanted to put that out there. What did we talk about today? Again, we've got some the Philly Fed manufacturing number. We had those jobless claims come in. We're seeing some action in silver and gold. Nat gas and oil have those inventory reports today, and then the equity indices. NASDAQ did close yesterday in correction territory, down 10% from its highs, and it's now trying to lead us higher today, up a little over 1%. Hopefully we can see some stabilization in the equities as
and Apple and Tesla are both gapping higher. So
look at that. So NASDAQ is probably going to be one of those ones we're going to see some volatility in today because that just seems to be the hottest spot in the market. Brian and I will be back again tomorrow morning. I want everyone to stay safe and warm. It is definitely brisk here in Chicago. And good luck in the markets, everyone. We'll catch you tomorrow. Thanks for joining.